Joining me to break down what we have seen in the market scene today is Richard Court from Argon Asset Management. Thank you so much for your time, Richard. Lots that is going on. Of course, those U.S. markets are sleeping, but that doesn't mean that we don't have to talk about the U.S. So let's gonna hear before they open the U.S. tariffs that are just keeping on rolling in, and we have the tariffs on steel manufacturers kicking off this week. What's your take on how markets are taking those moves at the moment?
Well, the U.S. administration is definitely keeping us on our toes with all of these tariffs. But just from our point of view, I think we need to just take a deep breath and just see where these tariffs sort of end up settling. Whether it's a mechanism, a bargaining tool, or bargaining chip used by the current U.S. administration, or whether they're here to stay and for how long. And then also markets and economies and industries will react to them and adjust. So it's not in our best interest or our clients' best interest to swing with every piece of daily information on new tariffs, but just by keeping a cool head and just keep on putting one foot in front of the other.
Well, it's also going to be quite interesting to see how investors see companies that provide steel and aluminium in on the JSE, really seeing if there is to be an impact that filters through there as well. Let's check in on the company news that came out of the JSE this morning. A lot of results are coming through. Starting off with food producer AVI coming out with interim results. The first thing I noticed was that stock plunged by 5% this morning. Reversed a little bit of those losses at this point, but revenue up by tepid 1%. But we did have a bigger climb on headline earnings per share, that growing by almost 9%. Just talk to me about the factors that have impacted the performance of this company.
Yeah, so just to your point about the share price reaction this morning, the market had higher expectations than I think it was almost 10% growth in earnings per share, which is quite a good, I think, it's quite a good result in this economy that we're experiencing in South Africa. So, but the market was obviously expecting a bit more from AVI. It is a very good business and it's very well run, so the market holds it in high esteem. But yeah, it's tough out there for South African focused businesses, and I think also the commentary from the company pointing to a growth being lower going forward unless something changes in terms of the macro backdrop also might have given the market pause or cause for concern. But yeah, the business is as I said, I think it's doing all right given the environment. A lot of the performance stems from its beverages business that had quite a large increase in operating profitability for the period.
Well, let's go into paper. Impact also coming out with its numbers today, but that being the year-end results. And really, usually when you see a company telling you about the growth percentage in certain line items, but then other line items not really bringing in a comparative picture there, you know that there is a weaker performance. And of course, Impact illustrating that as well. Revenue up 4%, but we are seeing pressure there on the bottom line. Just talk to me about how you've digested these numbers. Not much reaction. Actually, I'm not sure if it's because of the liquidity of the stock, but not seeing any reaction at this point.
Yeah, that earnings I think are down almost about 30%, but the market was well guided to that of the trading update, which came out earlier. So the market's not surprised by these numbers, which is possible reason why we didn't see any share price reaction today. And then also to your point, I think you're very right. It's a smaller cap business, and the free float is even smaller given Caxton's position of over 30% in Impact. So there's not a lot of liquidity in the stock. Yeah, but operationally, again, like another SA business that has to keep on plowing through in face of some severe headwinds.
Yeah. Well, talking about headwinds, of course, we know the headwinds that we have seen in the different commodities. Merafe also falling a victim to that. Oh, and that stock has just been plummeting and plummeting. I think the last time I checked before I got into studio, it was down 7%, now just over 9%. Also releasing its year-end results. You see a decrease right from the top line to the bottom line. Is there just no light at this point in time for certain commodities, at least in the short term?
Yeah, yes. So I mean, longer term, I mean, Merafe is a producer of ferrochrome, which is input into stainless steel, so it's driven
Yeah,
by that demand. But then the
yeah.
other side of the equation is is the supply of that commodity, and at the moment there's an oversupply of ferrochrome in the world, and that has an impact on ferrochrome prices, which impacts Merafe's bottom line. I think the rand also strengthened marginally compared to the prior period, which is, I mean, they're an exporter, so a stronger rand isn't is a headwind for them.
Yeah.
But it does operate in a cyclical industry. If you go back through Merafi's history, it has
Yeah.
good times and bad times, and one follows the next. But they have a very strong balance sheet. There's lots of cash on the balance sheet. I think it's still this morning it was on about a 6% dividend yield based on these dividends that they've declared. So it probably will be able to see itself through any downturn that might be on its way.
All right. Well, Richard, before we get to your stock picker, let's reflect on some counters that have found favor with your industry peers.
Oh, my stock pick is Stadio. 800,000 kids write matric, 400,000 of them have bachelor degree passes, only 200,000 of them get places in university. So there's a very, very large market to be addressed by Stadio. So
Okay.
Stadio is my stock pick.
Yes, so I mean, we've been talking about these private equity companies, and it's actually a private equity company. So my pick today is Remgro. Now, I'm not a long-term holder of Remgro, but at times the stock is just mispriced. So currently it's trading at an almost 50% discount to its net asset value. And if you look at the companies within it that have now released results in this results cycle, Rainbow today, absolutely fantastic. RCL trading statement was absolutely fantastic. First round results were really good. Outsurance results were really good. Discovery trading updates and results was really good. So I'm thinking that there's a mispricing here. I'm thinking that the market has not given Remgro the credit that is due, given what the underlying companies have done. And then added to that, just in Heineken's results, they mentioned how strong their performance has been in the South African market recently.
Yeah.
Remgro also owns a sizable stake in Heineken SA. The only thing that I think can really derail this is Community Investment Holdings, which is a fiber business that's been running some losses. Hopefully we can get some information around a potential long-awaited tie-up with Vodacom soon. That could be the catalyst for Remgro, but I just think the stock is just mispriced at the moment.
All right, well, let's get into those stock picks. Stadio in the education space, we didn't really see great student growth numbers coming out of Kira, but of course, Stadio is in a different space. They're focusing on tertiary education. Is this playing on the weaknesses of government and maybe less less capacity, smaller capacity that we are seeing in our universities, Richard?
Yeah, I think so. I mean, I agree with your guest on that one. I think it's I mean, Stadio is a very nice little business. It's I think it's very nice. It's a very good business model. I think it's a better business model than the private school listed companies. It's slightly less capital intensive. So it's an attractive business model, and it appears to be quite well run. Having said that, we don't own it, but it's only because of the size. I think it's about a 6 billion rand market cap, which is a bit on the small side for us.
Okay.
But yeah, nothing to disagree with there.
All right. What about Remgro? I mean, everything that Chantal said, they seem that there is strong upside to come in the performance. Although I think I remember in the last reporting period, there were some pressures. Of course, still waiting for the CIVH, the massive deal with Vodacom to see if that goes through or not. Your thoughts on Remgro?
Yes, the massive deal. So we hold some Remgro in our funds,
Okay.
but we're not. But it's a smaller position for us.
Okay.
We're a bit more cautious on the discount to NAV. I think one really needs to interrogate that NAV of Remgro's. I mean, Mediclinic makes up just under a third of that net asset value, and they're carrying it at a valuation that's very different to the current valuations of its peers in Netcare and Life Healthcare. I think it's almost. I think Netcare and Life almost half the
Okay.
valuation in terms on an equivalent basis. So I think the market is sort of looking through the Mediclinic valuation in Remgro's NAV. So I'm not convinced that the discount is on the face of it as large as it seems. But I still think there's enough of a discount there to provide a bit of margin of safety. So we also hold some in our funds for our clients.
All right. Well, let's get to your stock pick for today. What are you choosing?
I'm going for something a bit different. I'm going for the UK shopping centre business Hammerson. It's not something that gets spoken about a lot. It was in the news a lot prior to COVID and during COVID, and it went through an incredibly tough time, but it's come out of that now. It has a very strong balance sheet, and it's got improving operational metric in its UK shopping centres, and it's now deploying its balance sheet into what we consider to be value accretive avenues, such as buying back shares and buying out rather JV partners in the UK shopping centres at quite attractive valuation yields, we think. So the moment on a 6% dividend yield, management thinks that should be growing at about 5%, and we think they can add value on top of that. So we think it's quite an attractive forward-looking return in pounds.
All right. Well, thank you so much for your time and for your analysis today, Richard. Much appreciated. That was Richard Court from Argon Asset Management.